So in this episode, we are going to be looking at an advanced way of trading the smart money concept, which simply has to do with identifying order block and fair value gaps and simply adding this Fibonacci tool in it, which will give very high confirmation, right? So in this video, you guys are going to see how I mark out my key level, which is the Fibonacci level, which is also coinciding with the fair value gap. So whenever I see this Fibonacci level of 61% coincide with the fair value gap or an order block, it gives me an opportunity to take a sell trade. And guys, I'm going to show you many examples that have resulted in high probability winning trades. So once it coincides, I take my sell trade, right? So once I take my sell trade here, I know that I'm most likely going to get a very high winning trade. Okay, so basically what I need to do, I simply mark out the zone and then identify this store, and then I take my trades, guys, and I'll end up having a very high risk to reward winning trade, guys. And the next thing I have to do is identify the next Fibonacci level by just plotting it out and waiting for it, guys. So I'm going to share with you guys, as soon as price hit the Fibonacci level, what I do is I take my next sell trade, right? Because I've already made analyzed this and planned this video in advance. I know that this is a Fibonacci level of 61, and once I take my trade, I'm expecting to get a very high risk to reward winning trade, guys. That's what I'm going to be teaching you guys in this video, guys. You are going to make a lot with this strategy. So this is the level, and basically what I have to share with you guys is I'll share with you guys how to use the Fibonacci retracement tool, how to combine it with this order block fair value gap, which is smart money concept. What is Fibonacci retracement? I'm going to explain to you guys how to plot using it, and then how you can use it to take good trading opportunities like I just shared with you guys. This is a complete strategy that you can adapt, and guys, you are going to make a lot from the market. So you want to watch this video to the end. And also, if you are a smart money trader, if you would like to get very high winning risk to reward ratio trades, guys, make sure that you subscribe to this channel. If this is your first time, please don't forget to hit on the thumbs up button, guys. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. The Fibonacci retracement tool is simply a tool that is used to indicate where a retracement is going to end in a trending market, right? Which is almost the same like the order block and whatever. Now, if you see a trending market, for instance, taking a downtrend, price creating series of lower lows and lower highs, guys. So we want to be selling, for instance, when price breaks structure and pull back, right? So basically, we are going to be identifying either our order block or our fair value gaps, right, to know if price is going to retrace and end. All right, and basically some people even confused on whether they should be trading fair value gaps or order blocks. Right now, the Fibonacci retracement tool is going to plot out the zone where price could possibly, or the retracement could possibly end, and it could fall in the order block, it could fall in the fair value gap, right? So now basically we want to be entering at that pullback, so meaning that as price pulls back, we take our sell, and then price move down. Now if price is pulling back, the question is always, where are we going to be selling? We want to be selling as at a particular point where we feel that the exhaustion or the pullback is complete. So where exactly are we going to be selling, right? That is the question. Now the order block and the fair value gap or the Fibonacci retracement tool is going to tell us that, okay, this pullback can be enough here, let us sell here, let us sell here, or let us sell, right? So that's simply the point. Now the fair value gap or the Fibonacci retracement tool is simply to help us, right? Now how do you use this tool? Now if you go to your trading view or whatever trading platform you are using, you are going to see the Fibonacci retracement tool somewhere right at the beginning, or maybe around the toolbox, right? You are going to see it is written the Fibonacci retracement tool. All right, so the Fibonacci retracement tool, simply it was developed by one Leonardo Fibonacci, in which he actually stated out numbers, right? When price is actually pulling back, there were some areas or some zones, some particular number where he noticed that price will usually always pull back most often and then get exhausted for the trend to continue, right? So when you mark out your zone, maybe if you use your Fibonacci retracement tool, it most likely usually marks out some zones for you, right? You can see 61 level, 78 level, and 50 level, right? Now he noticed that price will most likely usually retrace and end around the 61 to the 78 level, right? Most often, and there'll be a turn, right? Now, you need to first of all understand how to use this Fibonacci retracement tool, because once price retraces to this level, that's where we are going to be taking our sell trade. Now, if it retraces and this 61.8 level and 78 level happens to fall in a fair value gap, we are going to sell. If it happens to fall in an order block, we are going to be selling, because most often price is going to respect that zone. You get the point now. So first of all, once you have understood this concept, guys, you need to understand how to use the Fibonacci tool. Now it is very simple, guys. When you see market creating series of lower lows or lower highs, what you simply do, you just pick your Fibonacci retracement tool. For instance, this is it here. Okay, at this point in time, this is what we call the structure high, right? The most recent high that have been created, and this is the most recent low, and price is pulling back. Remember, we are looking for a zone where we are going to sell. Now what you simply do is you pick the tool, right, and draw from the top of the most recent high, you drag it down to the most recent low. It's going to automatically plot out those zones for us, right? And then you are going to be looking for a sell. Now, if you look at this market structure here, we have the same thing. Price has created this low and then created the most recent high and created the most recent low and then starting pulling back. So what we simply do is we click on the Fibonacci retracement tool, right? Automatically, it is already on our clipboard. So you come and click from this most recent high here. Once you click, you drag, it's already activated, you drag down and then you click below at the low there. So it's going to plot out these zones for you. You are going to see that we have the 61 level, you have the 78 level, you have the 50 level. So if price pulled back right up to this level, it means it has pulled back 100% of this impulsive move, right? And the same thing applies here. Once you click here, for instance, you want to draw in this market structure, you simply click from this top, you drag, and then you place it at the wick of the low below, right? So once you click it there, right, you have marked out, it's going to plot out zones for you, 71, 50, guys. And as price is pulling back, you know where you are expecting price to end, and you are going to be looking for or you are expecting the pullback to be exhausted, and you are going to be looking forward entering with the trend, right? So basically the same opposite applies to an uptrending market. In an uptrending market where price is creating series of higher highs and higher lows, what you simply do when you have a Fibonacci retracement tool is you identify the most recent high and then the most recent low and the most recent high. Simply what you do is you pick the retracement tool from here, you drag from this bottom, and then you place at the top there. It's going to mark out these levels for us, right? And as price pulls back, we are going to be looking to be buying at the between the 50 to the 78. Now I'm going to share with you guys how I will usually mark out the zone. So it's basically as simple as, guys, forget about these colors, all of these numbers. It's not complicated. It's a very simple tool if you understand how to use it right. So it's very simple. So it's only to increase your win rate, so that you should be, most often you should be able to know when the pullback is ending, right? Whether you should be entering at the order block or the fair value gap. So it's very important, guys. All right, so basically that's just a demonstration. Now we already understand, if you're watching this video, most likely you should understand what an order block is, what a fair value gap is, break of structure. Now you see that price is in a series of impulsive, right? Price has created low, it has pulled back, it has created the next low, and it is pulling back. So we are looking for areas where we are going to be taking our sell. So what you simply do now, like I've already demonstrated, you pick your Fibonacci retracement tool, which is this tool here. Okay, you drag from the top, okay, to the bottom of this zone here. So once you drag like that, it's going to plot out our zones. Now if you look at it very well, the zones that are golden zones are the 61.8 level, right? Between the 61.8 level and the 78 is what we call the golden zone. There are people who enter based on the 50 level. Some people enter based on the 50 level. That's why you start hearing about premium price and discount price. So you should not be entering. If you find an order block that is below the 50 level, then don't be entering. It's not the best. You should be entering at least when price is more than the 50, when price has pulled back more than the 50 level, right to this zone here. So what you simply do is now you plot out the zone between the 61 to the 78 level. This zone, most likely price usually turns to respect. So you plot it out like that. Okay, you can see this is what I plotted. So at this point in time, it just falls exactly at this end of the fair value gap here. So between the 61 to the 78 level. So what you simply do now is, as price is pulling back, you are looking to to be entering at this zone here. Okay, so basically we are going to look, I've actually made many videos and I've explained. If you don't understand what fair value gap is or this particular concept, make sure you watch my other videos so that you should understand. You see that when price pulls back to this zone many times, it's going to drop. That's why we will usually place what our sell order or our sell limit order around this zone here, okay, expecting that as price gets to this zone, between this zone, because we have two confluence now, we already have what our fair value gap, this space here, and then we have this level. So you place your sell order and then your stop loss is above the zone, the 78 level, and then you have your first target at this previous low here, and then you wait for to see how price actually plays out. Okay, because you have had what kind of confirmation. Okay, you see that? So look at what happened exactly. Price actually hit at the beginning of the zone, consolidated a little bit, created what liquidity pole above the zone here. And what happened? It finally tapped properly into the zone, right? And what happened? It dropped powerfully. So now we see that price has simply broken structure. Okay, price actually broke structure here, and now we want to be looking for another selling opportunity. We already won this trade, right? So at this point in time, we have what we call a break of structure. Price has broken structure to the downside and it has created a new low, right? So when price creates a new low, what do? We are expecting now that price will pull back for us to be taking our next sell trade, because we are in a downtrending market. Now what you simply do is you pick your Fibonacci retracement tool again. Simple, guy. You drag from the most recent high to the most recent low. It's going to plot out our zone. The essence is for it to plot at our 61 level, and then our 78 level. So at this point in time, it's going to plot out our zone for us. Now look, between 61 and 78, what you do is you simply pick your toe, your rectangle toe, and then you plot. Now you see that it has included the fair value gap as well as the order block. Now we have the fair value gap. This is the order block here, because you can see this is the last candle that was formed before this strong impulsive move. Before this fair value gap was created, we have an order block. So at this time we have the order block included. So in this time you could be aggressive or you do it conservative. You could either wait for price to come here and then start rejecting. Maybe you look for confirmation in smaller time frame, or you can enter aggressively by placing a sell limit order. Sometimes I enter aggressively if I see price pulling back and building liquidity along the way, or pulling back gradually. I'll just place a sell limit order, right? Like in this situation here, you can see here price has built liquidity already, right? I don't want to go deeply into this. You can watch my other videos to learn about this, but you can get the basic concept here. So because price has created liquidity here, I'm going to place my sell limit order at the beginning of this zone here, right? Sometimes when I place with experience, I realized that I used to place my trade 50% of this level, right? And then I place my stop loss above the level. But now with time, I realized that sometimes price will just tap at the tip of the zone and then drop so powerfully. So with now, I realized that, okay, in order not to miss a very big move because of few pips, sometimes I can extend it a little bit. I can just extend it a little bit. I put it at the beginning of the zone there, and then I have my stop loss, my first target at this previous low, and then I have maybe another target somewhere below the zone and all of that, right? Waiting for price to pull back to that zone there. Okay, now you see that price execute my trade. Now, like I said earlier, you can still wait, go to smaller time frame like the 5 minute, the 1 minute, and look at what change of character to be taking your trade. All right, but now look at that, guys. Look at, you see how price dropped. Price just actually tapped at the tip of this zone. Like I said, I've been trading for a while and I have some experience with this, so that's what I'm actually teaching. So you can see we had the same concept here, we have the same scenario here, we have the same scenario. Now you see that price actually breaks and then creates a lower low. We have had another winning trade, guys. That is simply the concept. That's how you can continue winning your trades, and then you keep on, identifying and then waiting for price. Now we have another break of structure. Like I said, price has created another low here, and as price created another low, what happened? We now see that this is the most recent swing high, right? So we want to be looking for another pullback to be entering. So what do we do here? You simply pick your Fibonacci retracement tool again, guys. It's a simple but very effective strategy, right? And then you drag from the previous high, which is this, and then chill this low here, and then you click. So once you click, it's going to mark out our zones. So at this point in time, we have our 61 level to the 68 level here. So you can mark it out like that. Okay, so we mark it out like that. Well, that's the zones where you are going to be considering, right? Well, price sometimes could pull right up to this zone here, maybe to the beginning of this other block before dropping. Price sometimes could just reach here and drop, right? But now we are looking on probabilities. Trading is a numbers game. You want to look for a way in which you can be right many times, but not that you always be right. But if you are right many times, guys, 60-70% of the time, you see that you are going to make a lot. So you see now price reject from this zone. So now if you want to enter maybe aggressively, you can take your sell immediately, right? I don't want the video to be too long. If not, we would have started going into doing multiple confirmation by dropping in smaller time frame and looking forward change of character. But I've made some videos in which I've explained this, or I could still make some videos and I explain the concept of looking for confirmations in smaller time frame, right? So that you can grasp the concept and you see what happened. Price drops, guys. That is a good winning trade, guys. Now you could even catch 1:10 with this, guys. Look at how simple it is. And right now what happened, we have the next situation where price breaks structure. We have another break of structure here, and then since the market is a very good trending market, that's why it applies in good trending markets. So what you do now is wait for price again to pull back. But now for you to wait for price to pull back, you simply need to drag. Now we have this swing. This swing is actually too long, right? So let's look at the H4. Let's go to the H4 here. We have a very long move here. This has been the biggest move, guys. And at this point in time, what you simply need to do now is remember the concept. It's very simple. You just pick your Fibonacci retracement tool here. Okay, you drag from this top and then you put at the bottom. What happened? It's going to plot out our zone for us. So if you look at it, this is our 61 level right up to this zone here. Okay, and then you can plot it out like that. Okay, and then you wait for price to pull back. Okay, I actually took a trade on this particular move here based on a change of character in smaller time frame, guys. And like I said, I don't want the video to be too long. You can see price already reject, and here we can be entering already, and then we are looking to sell. Oh, sorry. And then we are looking to sell and then targeting these zones below there, right? And price taps this zone here. Okay, and you see that price tapped properly and it is actually dropping. Okay, and I believe that's where price is currently at. Okay, and now as market opens, we have a high probability that price is going to move down, right? So basically that is it, guys. If you want to get signals from me, right, I'm going to drop a link of my video of my Telegram in this video description below, guys. If you want to so we have many confirmations which we usually use to take our trades, right? In the smaller time frame, like even the smaller time frame, you can use many factors. Even in the smaller time frame, if you try to use the Fibonacci retracement tool here, you see that as price pulls back around this 61 level here, you see that it still dropped, right? And then you can see continue going and then catching other opportunities as price moves. So basically that is it, guys. We have been able to open a signal forum and it's been quite active this while, guys. We have very high winning trades in our VIP and we catch very big moves. So if you want to benefit from our VIP signal forum, guys, where you have high winning trades, high risk to reward trades with very few drawdowns, guys, make sure that you hit us up. Our link will be in this Telegram description below, and we are actually giving out a discount. So you want to benefit from this by hitting us up, guys. And also, if you have loved what you saw in this video so far, make sure you give us a thumbs up, subscribe to this channel, please, guys. Make sure you support us as well. That's the only way you can give back to us as we give you content. Also support us. All you need to do is click on the thumbs up button. Also write a comment, engage, and tell us what is your options. Also make sure that you write a comment in the comment section below, share with other traders so that we can all grow together. Thank you so much for watching. See you in the next video.